This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, October 20th, 2015. So the euro continues to extend its declines after stalling out yet again ahead of 115. The market has stalled out on recent attempts this year, going back to May, June, September, and now October. And so deeper setbacks are favored potentially back down towards the recent medium-term support at 110.87 going back to early September. At this point, while the market ultimately holds below 117.15, the longer-term downtrend does remain intact and the pressure remains on the downside. We need to see a break back above 115 to compromise this outlook. Sterling dollar. So cable right now has been mostly recovering off recent lows, although the market is looking for a lower top following that high that we saw in 2015 at 59.30. We've seen since then a series of lower tops, and so this suggests that the market is now looking for a fresh lower top somewhere in the 155 area ahead of the next downside extension. We could see fresh upside over the coming sessions towards the 55.50 area, which represents a 78.6 fib retracement, but again, ultimately, any rallies are expected to be well capped ahead of 156.59 in favor of a bearish resumption. Dollar yen. So although we've seen some recent recovery off the lows that we saw last week in dollar yen just shy of 118, the market does favor the downside with a fresh lower top side out ahead of an eventual retest of that August low at 116.12. At this point, any rally should be very well capped into the mid 120s, while ultimately only back above 121.74 would compromise the bearish outlook. Euro Swiss. So Euro Swiss has been mostly chopping in a consolidation over the past few months, although the market is still within a recovery structure off those recent multi-year lows that we saw, those record lows from earlier in 2015. At this point, look for the market to eventually trade back above recent highs at 110.50 and towards a measured move objective at 112 further up. Really only back below 107.14 would compromise this outlook. Aussie dollar. So Aussie remains confined to a broader downtrend, although we have since recently seen a nice recovery off those multi-year lows. At this point, it looks like the market is trying to carve out the next lower top below 74.40, although we're going to need some confirmation on a close below recent lows that we saw around the 71.98 area. Dollar CAD. So dollar CAD looks to have finally found some solid support by that previous resistance going back to March in the 128s, and a higher low is now sought out ahead of the next upside extension and bullish continuation beyond those recent 11-year highs at 134.57. Kiwi dollar. So Kiwi has enjoyed and is still enjoying that nice recovery off those recent multi-year lows, with the market trading all the way up towards 69 ahead of the latest minor setback. It is possible that the market still tries to head higher towards a key 50% fib retracement off of a recent major move, although the market should ultimately be well capped ahead of the 70 area or into the 70 area in favor of a bearish resumption. SPX 500. So the S&P 500 continues to grind higher following that impressive August recovery all the way back up above 2,000. At this point, though, the market is going to run into some solid resistance, some previous support and outturn resistance in the 2030 to 2050 area, with a lower top sought out in favor of a bearish resumption. The breakdown that we saw back in August suggests that the market is seeing a structural shift, and despite this latest rally, so long as the market holds below 2050, the market is favored back to the downside. Gold. So although we've seen some setbacks in recent trade in gold, the recent break above 1170 is a significant development, sets up a higher low at 1100, and opens the door for the next major upside extension towards medium-term resistance at 1233. As such, any setbacks now, these current setbacks are expected to be very well supported ahead of the 1150 area, with only a break back below 1135 to compromise or delay the recovery outlook for the gold market.